Okay, good morning everyone, and thank you for joining me for today's webinar on new guidance for the UAE's economic substance regulations, brought to you by MBG Corporate Services Dubai. My name is James Martin. I am the advisory manager for the European Trading Desk, so I will be your host, guiding you through the talk today. Along with me, I have two speakers who will be joining me on this journey, who I will introduce to you very shortly. We have a lot of content to get through today, you'll be pleased to know. So we're going to jump straight in to giving you some insight around the business and an overview. So to begin, we'll talk you through MBG Corporate Services for anyone who is unaware of the business and who perhaps has been referred into today's webinar. After a short introduction, there will be an ESR survey, so don't be alarmed. There will be a pop-up screen that will appear in your monitors. In that, there will be 4 or 5 entry-level questions around ESR, which will give us a lot of insight as to how prepared businesses are and what stage you personally are currently at in your ESR journey. From there, I will then pass over to my colleague, Sakina, Dickenwala, our Director for Legal Services, who I'll properly introduce in a moment. And after that, my colleague, Manoj Pandey, who is the partner for direct tax within the business, will talk through tax, transfer pricing, penalty, exposure. There will be an open Q&A at the end of this session. What I would always encourage, if you do have any questions throughout the course of this talk, please do share it within the Q&A box with us. Now, what we will always endeavour to do, we're going to have time dependent. We'll probably have between 6 and 10 questions, hopefully that we're able to answer live with you all. And then for anyone whose questions we are unable to get to initially, we will always follow up with you and share some answers. Some questions sometimes can be very specific and may just require a follow-up with us to get a bit more information. And then finally, at the end, there will be an opportunity for feedback. Again, another window will populate. It's very handy for us as an organization. We run a lot of webinars. We do a lot of education with our clients. So for us, it's always important to get feedback of any kind. We want to know how we can improve and how we can do better for next time. Next slide, please. So, MBG Corporate Services. We are a full-service advisory business established in 2002, as you can see. So we are 18 years young right now. We are located in 6 locations globally. We have 16 offices covering all major emerging regions. Our team in the UAE comprises of about 150 staff who are fully versed in all elements of M&A, tax advisory, risk advisory, technology advisory, legal. So we're fully able to support businesses across their entire company life cycle. Next slide, please. Our unique market position gives us a lot of insight when it comes to working with clients. So as you saw from the previous slide, we have over 3,000 plus clients. Majority of those are large corporates and MNCs, although we have a wealth of experience in the region working with SME and mid-sized businesses as well. We cover corporate entities the world over. We believe that there should be no barriers in partnering with all of our clients. So as you can see from this slide, whether it's linguistic, whether it's technological, whether it's commercial barriers, we are there to partner with you to make sure that any challenges we are able to overcome. Next slide, please. So, as mentioned earlier, part of our business model is there to support companies from launch, so new business setup, PRO services, all the way through to their growth, maturity, extension stages. We have the bandwidth and scope to advise on a number of different policies, and the way that our business is set up and arranged, we will have an expert in any particular given area that can provide really solid, in-depth advice, whether it be here or whether it be abroad. Next slide, please. So the following two slides are just a bit more of an in-depth overview as to some of the key pillars that we work on. Today, we will be having guest speakers from direct tax and also from the legal service, but this list is not exhaustive. So again, we can help businesses with any element of audit, statutory audit. Audit readiness is something that if you are a larger organization, perhaps you have global partnerships in place, we can help make that caseload easier overall operationally. We do an awful lot of work in risk advisory and indirect tax. Manoj, Pandey, our partner today for direct tax, will talk a bit about himself and the work that he does across the board. And then we come to some of the more specialized areas, legal advisory, strategy transformation. In this part of the world, M&A over the last few years has been a vital business service to a lot of our clients to ensure smooth business continuity. And our technology advisory at the moment is some of the best. We do an awful lot of very, very good work around data protection, cyber security, RPA, smart bots, machine learning, AI. I could talk forever on the subject, but we have a solid team of industry experts able to provide support. This particular slide just goes to show the breadth of our skills and experience. We very much consider ourselves as industry agnostic, and the benefit for working with clients across a range of industries is that we can look at best practice at a macro level and really make sure that we understand what makes right decisions for businesses and enables us to really tailor our approach to all of our clients to make sure that you get the best engagement, the best service, and actually the best costings as well. So best value overall. So moving on to slide 2. That's just a quick overview of MBG corporate services in Dubai. Now my colleague is going to open the survey in a moment. Again, don't be afraid. A pop-up will appear in your window. Please just take 30 to 40 seconds and complete all of the questions for us. It's really going to help us really tailor some next steps moving forward and just understanding where you are in your journey currently. And the team at my side, if you could just let me know once all of the questions have been answered and the results are in, that'd be awesome. Okay, great. So looks like all the results are in, which is excellent. Hopefully everyone can see the results on their monitors as well. I won't spend too much time digging into the minutiae of these, but it's good to see that people have a grasp of ESR. If you're filing it on time, great. You've understood the initial requirements for the first phase of ESR, which was released earlier this year, and you think that there may be some benefit for the insight that we're about to share with you today. So that's excellent. So look, without further ado, let's dive in. If we could go to the next slide, please. And I'm delighted to welcome everyone to Mrs. Sakina Dickenwala. So Sakina is in charge of our legal services business. So she's the director for the team here. As you can see from her bio, 8 years professional experience working with a multitude of clients, corporate commercial law, employment law, real estate law. She's our superstar when it comes to all things legal services. She's worked with multinationals, SMEs, mid-sized businesses, advising on everything that you could think of. So without any hesitation, let me pass over to Sakina, and she will take you through the first part of today's talk. Thank you.
Thank you, James, and a very good morning to all of you. So, next slide. The Ministry of Finance has issued a new directive providing guidance and clarification for the ESR compliances through issuing the Ministerial Decision No. 100 of 2020 on the issuance of directives for the implementation of provisions of the Cabinet Decision No. 57 of 2020, which has repealed the earlier regulation that is the Cabinet Decision No. 31 of 2019. Now it is necessary for all the UAE entities to be aware of the new developments in order to comply with the ESR compliances and in order to avoid any penalties and stringent sanctions. Now let us see what are the why the new guidance has been brought into the picture. So first of all, there was some consultation being made by the UAE Ministry with the OECD, BEPS and EU guidances and directives, and that is how they have brought this new regulation under the purview. Also under this new regulations, there are some new exemptions which are being introduced. Also, the definition of the licensees has been redefined, and it has made a easiness in the compliances. There are some new clarifications which are being brought by the ministry, which were not been earlier there, which has removed some confusions. And also there has been an enhancement in the penalties, which has made a stricter implementation, so ensuring all the entities being comply with the ESR regulations. Also, there is a new admin work and new admin framework, and the authorities are now being centralized with the Ministry of Finance and Federal Tax Authority. And also the Federal Tax Authority has been appointed as a national assessing authority, which will undertake the assessments to determine whether a licensee has met the economic substance test. Also, it has the powers to impose administrative penalties, to hear and decide on the appeals, and also it can make an information exchange between the jurisdiction. Now, by purview of this new developments which are being brought by the ministries, all the licensees are required to re-notify the authorities and specifically to Minister of Finance on the online portal, which will go live in the coming period of time. Next slide. Now let's discuss about what are the changes being brought under the relevant activities. So when you see the arrow going upward with a red color, it means that there is an enhancement in the scope. When there is a downward arrow with a green color, there is a reduction in the scope. And when you see the with the yellow color, it means there is no change in those relevant activities. So now let's see in details what are the major changes which are being brought by issuance of this new guidelines. Next slide. Herein we have covered the entity exemptions. So previously what was there is there was a requirement of the 51% ownership by a federal or an emirate government or a UAE government body or authority which was being held in any licensee. So if there is any shareholding by the government, then they can claim the exemptions. So this particular exemption has been removed and replaced by the current regulation exemptions, which are as under. So first of all, the investment fund has been removed from the definition of the investment fund management business. There is a new exemption which can be claimed by the tax residents of a jurisdiction other than UAE. Also, there is one exemption which is being given to the UAE residents. That means the condition that it is not a part of any multinational group, and also it only carries out the business within the UAE. Also, there is a branches of a foreign company which are paying taxes outside the UAE, and also some exemptions for whom MOF issues a decision to grant in a capacity of a exempted licensees. So now when we talk about exemption, it is very important to note that any entity is claiming any exemption, they need to they need to show the evidence for claiming such exemptions. Like when we talk about that there is an entity which is not a tax resident of UAE, they're claiming an exemption under purview of this clause, and they need to bring some documents from outside the UAE to show their residency status, like tax residency outside UAE when they are paying any taxes outside UAE, then copy of those tax returns they need to submit to the authority to claim the exemptions. And also the one important part to note here is that an entity which is carrying on a relevant activity, also plus the entities which are claiming the exemption, they need to file the notification. It is mandatory on them to file the notification. Next slide. Now this clarifies the treatment of the branches. So previously what was being covered, there was no clarification regarding the branches of the local companies as well as the branch of a foreign company. So now they have made a very clear treatment for each entities. So UAE branches of a UAE local company, they do not need to separately file a notification or separately file a substance or reporting. The main entity, the parent entity can consolidate and they can file the notifications. Then there's a clarification for foreign branches that they will be considered as a separate entity if they are conducting the relevant activity within the UAE. And also there is one clarification on branch of a local company which has its branch located outside the UAE. So in this case, the branches paying taxes outside the UAE, they do not need to consolidate the income of that branch which is located outside the UAE. So this has comparatively reduced a compliance requirement for the local branches which are being registered within the UAE of the company. Next slide. Now let's talk about how this new guidance has made an enhancement in the scope with respect to distribution and service center business, which is very important aspect that has been conveyed in the guidance. So what was there in the previously was, under the distribution definition specifically, an entity which was purchasing any goods from outside the UAE from its foreign connected party, which was bringing the goods within the UAE and then re-exporting it to the customers outside the UAE, they were specifically being captured and covered under the definition of the distribution. And also service center business, it was given that any company which is providing any services to its foreign connected parties business outside the UAE, they are being covered under the regulation. So now this definition has been changed and the purview of the definition has been enhanced. It just simply says that purchasing of goods from foreign connected person outside the UAE and selling it to the customers will be covered under the purview of the new guidance. Also for service center business, it has been clarified that providing services to the foreign connected person outside the UAE would come under the purview of the service center definition. So by removing these conditions, they have basically enhanced the scope of the distribution and service center business. So now let's say there is a transaction for bill to ship transactions are there. Those are being captured under the distribution and service center business definition. Next slide. Under the IP business, now there was a condition that when a licensee carrying on the intellectual property business, when it will be termed as a high-risk IP. So there was two conditions given earlier, that when they're acquiring the IP assets from a connected person, then it is in consideration for funding and research and development by another person situated in a foreign jurisdiction, and the business licensees has sold the IP assets to a connected person, and it is earning a separate identifiable income from such IP asset. Or there was a condition that that particular licensee should not be engaged in the branding or marketing or distribution as a part of its UAE core income generating activity. So now in the new amendment, they have removed this condition, which will mean that if licensee is satisfying condition 1, and it is using it for the branding or marketing, then also it will come under the purview of the high risk IP licensee. And as we have noted in the earlier resolution also, and now in the new guidance, there is a increased substance requirement for the high risk IP business as compared to the other relevant activities. So all those licensees which are conducting the high risk IP business, they specifically have an increased substance requirement to be fulfilled by them. Next slide. So under the holding company business, what they have done earlier, a holding company business was defined under a particular regulation. Those businesses were coming under the purview of the economic substance regulation. So when we talk about other regulation, it covers the UAE company commercial law or any free zone regulation where the licensing is conducting its business. So now this definition has been removed. So what has happened with the removal of this definition is there is an increase in the purview of the holding company business. How? Because when we see the definition of the UAE commercial law or any free zone regulation, it specifically states that any licensee which is holding 51% or more shares in any other company, they will term as a holding company. But now since this definition has been removed, it has enhanced the scope that in case if there is any minority holding, it could be any person, it could be 5%, 10%, 15%, those all companies will be covered under the holding company business. So basically by removing this, they have enhanced the scope of the holding company businesses. Next slide. Now, what are the new requirements which are being imposed on the licensees? So the most important requirement to have the businesses reassessed by purview of the new guidance. So what will happen? There could be a case that companies may claim the exemption. There could be a case that companies which were not earlier falling into the purview of the economic substance regulation now will fall under the purview of the regulation, and they need to do the reporting and they need to do the compliance under the economic substance test parameters. So we highly recommend that all the companies needs to do a reassessment, and they need to redefine their status, and they need to check that whether they are being covered under the new scope of the economic substance regulation or not. When we talk about the reassessment should specifically cover operational, commercial, financial, taxation, transfer pricing, legal, and governance aspects, so that all the business visions of the business are being retouched and reassessed carefully. Next slide. Also, there are some new clarifications which are being brought by the new guidance with respect to outsourcing function, because this has more relevancy with the economic substance testing parameters fulfillment. So this will be applicable to the companies which are engaged in conducting the relevant activities and they are earning the income. If they are outsourcing any function, then the outsourcing should not be taking place outside the UAE. Also, some functions like back office functions, including accounting or HR functions, which normally been outsourced by the companies, are need not to be considered. Also, members are required to be the UAE resident but be physically present in the UAE while taking the decisions. There is a requirement to submit the financial statements annually when the report filing will happen. And also the connected person now being defined as an entity that is a part of the same group as a licensee or exempted licensee. And also before there was no definition group, which is now been defined as two or more entities related through same ownership or control, such that they are required to prepare a consolidated financial statement for financial reporting purposes. Next slide. So as we have discussed that what are the new requirements that needs to take it forward is the notification. So Currently, there'll be a re-notification which will be filed with the Ministry of Finance on its portal. Also, there is a requirement to file the notification within 6 months from the end of the financial year. This notification filing requirements were not being specifically guided in the earlier guidances. And the year 2019 was being extended to 30. The licensees that have already filed the notification, they need to reassess the businesses, they need to re-notify the Ministry of Finance through its online portal filings. And the new guidance does not specify the re-notification deadline as of now, but as and when the deadline will be announced by the ministry, we will keep our clients updated with the same regard. And the report filing deadline will be within the 12 months within the 12 months of end of the financial year. So the first report file will happen in 31st December 2020 for the previous year, which is 31st December 2019. So just to conclude, I would like to thank everyone for attending, and I hope you'll have a informative session, and I would request my colleague James to take the session further.
Thank you, Sakina. Perfect. So look, I think some of the key takeaways for this, if you are in any doubt as to whether you need to reassess for the new regulations for ESR, reach out to us and have a conversation, and we can discuss, because deadlines are fast approaching, and ESR already has quite a broad bandwidth, and that is only going to increase as this particular policy, this particular regulation becomes more ingrained into the society in the region. So feel free post webinar to reach out, and we can always assist and advise on the best way to move forward. Just one final thing before I move on to the second element of the talk today. This video will be available post talk. It will likely be live on our website over the next few days. So if there is anything that you feel like you've missed, if there's anything you would like to go over again, I appreciate some of the technical legal aspects may need revisiting dependent on your particular circumstances, then the video will be available, and we can share links as and when required with anyone who needs them. So moving on to our second guest speaker, it is my great pleasure to introduce Mr. Manoj Pandey, who is the Direct Tax Partner for MBG Corporate Services. Mr. Pandey leads the tax practice for the business, chartered accountant, as you can see from his bio, over 18 years professional experience in taxation, again, working with a very, very broad range of businesses here and internationally. So without taking up any more time, Mr. Manoj Pandey.
Yeah, thank you, James. So thank you so much, all the guests, and on behalf of MBG Group, I extend a warm welcome to you. I am going to touch upon a very important aspect. Next slide. Next slide. Yeah. So I'm going to touch upon a very important aspect, which is on the tax side. And my colleague has already, discussed in detail regarding the ESR, the filing requirement in terms of notification and report. What I'm going to talk about is differently, altogether a very different aspect, which is very relevant for the multinational enterprise. So as a background, we all know that UAE is subject to the CBCR tax regime, which means it needs to file the CBCR report for a holding company where the consolidated turnover exceeds the threshold, prescribed threshold, which is 750 million euro in terms of euro. And then UAE entities also need to obtain a tax residency certificate if they are enjoying any treaty benefit. Beside this, we have a third aspect, which is ESR, which has also now been made applicable from the financial year 2019. So now having these three things, a tax residency certificate, a CBCR, and economic substance regulation. Now, if you see all these three aspects clubbed together, it gives an indication that now UAE is going and following the transparent tax regime structure. As we all been knowing that UAE has a tax, no tax, and it has a very beneficial tax treaty with many countries, especially in GCC and India and other countries. So one has to know that what will be the fallout if something goes wrong with your ESR. Just for some of the participants, we will briefly explain what TRC is. So TRC is a document which is issued by Ministry of Finance and evidencing that the company has a formal status of resident in UAE and it is eligible to claim the tax treaty benefits. CBCR is a document which is filed by the holding company and it evidences that at a group level, at a multinational enterprise level, the revenue, the profit, the employee, the assets, the IPR, all have been placed or all have been, are been charged on a consistent level without any discrepancy. And of course, ESR, the purpose of ESR is to demonstrate that the entities in UAE has a substance. So what is going to be the fallout if a UAE entity doesn't meet the substance on the treaty benefit or on the CBCR filing by the holding company at maybe at India level holding company or at Singapore level or China level? That is something which we'll see in the next slide. So economic substance, there are the three pillars we have, which is core income generating activities, management and control, and the strength of employee asset and expenses at local level in UAE. So we'll see how ESR failure can lead to tax exposure, not only at a UAE level, but also at a holding company level in other countries, especially for those entities which are part of a multinational enterprise. Next slide. Now I'll explain you all this with an example of this case study. So let us say an entity which is in Singapore, ABC Singapore, is exporting, certain goods to XYZ in UAE. The price of the goods was 100 and it was sold to XYZ UAE at 150, which means the UAE entity has made up a profit of 50 on 100, which roughly works out to somewhere around 50% profit. Now, if you see, when we file the ESR report, we have to demonstrate that whether this 50 rupees of profit is justified, keeping in mind that the local activities which are there in place in terms of employee, in terms of asset, in terms of management and control, taken all together. Assume that, if a UAE entity, they file, a ESR report, and the ESR report, when assessed by FTA, they come up with a conclusion that the 50 rupees profit is not commensurate with the activities that you have demonstrated. So in that case, what is going to be the fallout? So first fallout, of course, will be on the XYZ UAE, which is, it will be subjected to the penalties of, monetary penalties, and there are non-filing penalties, inaccurate penalties, all those will be levied. Beside this, the other implication under the direct tax could be one, that the tax residency certificate, that can also be, taken as a negatively by the FTAs or the Ministry of Finance. They may say that, since you're not undertaking the activity substantially or in substance in UAE level, you are also not eligible to take a tax residency certificate. So you can see the implications are wide and quite serious, especially for the entity which is, using the treaty benefits with countries like Singapore, with India, or with other European countries. And if they are not paying any taxes or they are not withholding taxes, the implications going to be huge. It could be in millions. So one has to take the ESR very, very seriously, because not only it has an implication or penalty exposures under the UAE laws, but it has also implications under the other, subjects. Same way, let us say if the UAE entity fails the substance test, then what will happen to ABC Singapore, which is also subject to CBCR or country by country report filing, which means the country by country reporting filed at Singapore level, which has considered a transfer of profit of rupees 50 at UAE, may be incorrect and can be regarded as incorrect. So ABC Singapore also can be, and when let us say FTA exchange this kind of information that XYZ is not able to meet the substance test, and they exchange this information with the tax authorities in Singapore. So Singapore authorities, they will approach to ABC and they may say that look, you have not fulfilled the substance test, and whatever profits you have been transferring to XYZ in UAE is quite high. And that is high because UAE doesn't have any tax structure. So you are deliberately transferring profits at UAE level. And therefore, they may also impose penalties on incorrect filing of CBSCR report at Singapore level. Same way, so a TRC can be denied. A country by country report can have a penalty exposure at ABC Singapore level. And there is a possibility that a transfer pricing study at a local transfer pricing report filed at Singapore level, that can also be regarded as incorrect. And then you have, implications or penalty coming at Singapore level. So in this particular example, you may see that a XYZ UAE, if it was using a tax residency certificate to claim treaty benefits vis-a-vis its Singapore entity for its transaction with Singapore entity, or for its transaction with KSA, all those could be jeopardized. All those could have now a tax exposure, and the value of transaction is huge. The tax exposure and penalty interest, it could also be huge. So one has to take this ESR filing very, very seriously, and not to go only by the format of the report. It also needs to be reconciled with the filing that you have made at a global level, because these information is not only will be restricted at the FTA level, it's going to be exchanged seamlessly. It's going to be exchanged with KSA, with Singapore, and with other tax authorities. And especially, exchanges will be much more where the entity in UAE, they fail the substance test. Next time. So here, there's a very, very important change now. In the earlier regulation, only Ministry of Finance was the leading body, and it has, the free zone and the mainland authorities as it's reporting to them. But now they have interposed the FTA also. And FTA will be collecting, assessing all the information they will be giving to Ministry of Finance, and Ministry of Finance now will exchange all the information with all the relevant authorities. So we have to be very careful as an entity that whatever you are filing with the Ministry of Finance will not be staying only with Ministry of Finance, is going to be exchanged with other tax authorities worldwide. So one has to be very, very careful, and this document in ESR, it needs to be reconciled with other filings at global level. We cannot do it on a standalone basis because the risks are manifold. The risks are with the ABC Singapore, the risks are with XYZ, the risk that was at the KSA level. So in a diagram that we gave in the previous slide, the risks are there not only with UAE tax authorities but with other two authorities as well. And when when FTA is now been involved, FTA has a wide access to data. They have access to data in VAT. They have been assessing all the filings. They'll be co-working with free zone authorities. They'll be working with mainland authorities, and they can also, take the support of local consultant. This could be any accounting or tax consultant. So their powers are wide. Their hands are very, very, will full of information, and with what data analytics, they can come up with so many analysis. So as a filer, as a company, we have to be very careful that we don't file things on a standalone basis. We're just keeping like, look, okay, this is what we have mentioned in our license, and this is what I am going to report in ESR. That will be a very wrong stance. One has to be very careful. Next slide. So in the previous slide, we discussed, how the importance of the ESR in terms of other jurisdiction. Now, if you see in this particular slide, we are giving an example like India, Japan, China, Europe, and UAE. Well, important aspect is that these countries broadly, except for Singapore, they follow both the regime of taxation, which is a source-based taxation, and a global-based taxation. So for example, if an entity is a company which is situated in India or Japan, and if they have some entity at UAE level, so whatever profits are being reported at UAE level, that also gets consolidated at the home level, and then it may be offered for tax. Except for India, other countries, taxation on residence base is applicable. Singapore is a country where source-based taxation is applicable. So why I'm saying this is that, the importance is that in these countries, they follow the test of residency as management and control. And ESR also follows management and control as a test. So these are very two common things. And so one cannot, fool around with the thing that, I have this management, my number of employees is adequate. It cannot be, because all these countries, they are very well versed with all this principle of management and control. And if management control is not situated properly, then there could be a risk at both the levels. And all these countries in chart, you can see country by country reporting is also applicable. Transfer pricing regime is also there. So one has to be very, very careful in terms of assessing the risk, in terms of alignments in filing. And these ESR should be aligned with the CDCR filing, with the transfer pricing policy reports at a global level. And at the domestic level also, one has to be careful as to what we are filing in ESR, what is being filed at VAT, what is being made a declaration to the free zones, and what is there in the audited financial statement. So each and everything needs to be reconciled. And we cannot just simply say that, this we filed it only for the purposes, limited purposes of ESR, or limited purposes for declaring this information. That stance will not hold good. Next slide. So this is another aspect that we had already discussed, that in terms of responsibility matrix, the federal tax authorities, they have been interposed here, and they are the person who will be responsible to determine the economic substance test, and they will enforce the compliance, and they are the ones who will be imposing penalties, etc. So, and they'll be exchanging a lot of information. They'll be directly coordinating with Ministry of Finance, and they'll be coordinating with the regulatory authorities in the mainland and the free zones. So one can be rest assured that, whatever filings you have, there's going to be a complete and thorough data analysis. And any discrepancies at any level is going to be highlighted. And if it is highlighted, it's going to be exchanged with other countries also. So, and I would just like to also talk like, this is a very, very serious thing in the sense that, a non-failure of economic substance at a repeated level, at a second level, can also lead to revoking of the license or activities in UAE. So this is such an important compliance which directly hits not only on the compliance with the penalty, but also hits on your future existence in UAE. So one cannot go wrong at all in these filings. Next slide. So offences and penalties, they have introduced higher penalties now. Earlier there was a range of 10,000 to 50,000, or around 100,000 to 300,000. Now they have increased it 4 to 5 times. So the increase in the new guidelines, in the guidance of increasing the penalty, is a clear indication that The authorities are very, very serious of this compliance, and they also want that all the licensees in UAE, they also become serious, and when they do the filing, they do it, by reconciling everything. Next slide. There are certain open points. So my colleague Sakina, she has already discussed in quite detail in terms of applicability and all. But of course, there are certain points, and we get those answers when we have the access to all the information, the business model, and all the corroborative evidences, and then we come up with the best possible solution, which could be suited to your case. One of the open points could be whether branch office of foreign company can be exempted in the absence of documentary proof. So answer is, one has to be careful. Like, we have to go by whatever filing that has been done in the past. So let us say for the relevant year, it may not be filed in the global level, but we'll also see what has been done in the past, and then we can take a position based on discussion with the client. What is the tax and business risk in case of failure to demonstrate substance? So tax and business risks are huge, humongous, if you see, not only at the UAE level, but the global level, especially for companies which are part of a multinational enterprise. The filing of refiling, one has to be careful. So all the 9 activities, they needs to be reassessed. They needs to be seen that whether the exemption will apply or not. And for entities, even if the exemption applies, it will make sense to file under the new notification, because the file forms and etc. will be new now. The ESR report, there could be question like, what would be the content of ESR report? As of now, the ESR report is not yet out, but we have the access to ESR report filed at the other jurisdictions, especially in Bahrain. So we can give some guidance, but we have to wait and watch like what ESR report format we get. The holding company applicability, they are nowadays, in the new guidance, they are saying that holding companies are applicable only to companies which are deriving dividend income and capital gains, but they don't talk about interest. So one has to again take a call based on the facts and circumstances. Next slide. So the way forward would be to first assess and reassess the applicability, file the notification, re-notification, maintain the robust documentation, and file ESR report after everything. Okay, thank you so much. I'll now pass it on to James.
Manoj, thank you very much. Insightful as always. So yeah, look guys, I think the main takeaways from this, just following on from Sakina's discussion, is that this is changing, it's evolving over time. So if you are in any doubt, feel free to reach out to us for advice or support. We've all seen the fine structure now and how that is changing. It's better to be safe than sorry and err on the side of caution. If it's the case of just having a telephone conversation or setting up a Zoom meeting as a follow-up, our experts within the business are perfectly positioned to advise on a range of questions, which segues perfectly into our Q&A section. So we have quite a lot of questions. We've had questions coming in through the Q&A chat via Zoom, through email, through social media. We have collated as many as we can over time. I appreciate we're going to try and answer as many as we can for people, but time is against us. So the first question, if I can direct it to you, please, Manoj. Question here says, we're not withholding taxes on payment for services from India as per India and UAE treaty. Do you think the tax authority in India can deny this on not meeting the ESR test in the UAE? What do you think on that?
Well, that's a very good question. And the answer, of course, is yes. Because, upon ESR test not being met, it means that UAE entity doesn't have a substance in UAE. This could result in UAE authorities exchanging information with Indian authorities that, look, this UAE authority doesn't have a substance. And then the tax authorities in India, they may disregard the tax residency certificate. And this could give an exposure. For services, the exposure could be as high as 10% of the amount paid. So that there could be a direct tax exposure of 10%. Thank you.
Thank you very much. So Sakina, I have a question for you here. It says, please confirm that entities are in the listed activities are required to notify and comply with ESR and not all, since many professionals are advising to file notification even if they are not involved in the listed activities. So again, I think this question is focusing just around which activities are relevant and whether people should still need to reassess depending on any confusion around their activities.
Yeah, hi James. Thank you for this question. I would like to answer that yes, definitely there are the list of activities which are being given, and clearly there is a guideline from the Ministry of Finance and the the relevant authorities that the companies which are conducting relevant activity, they have an obligation to file the notification, including the exempt licenses. However, since this is the first time that this kind of law has been introduced in this country, we are also advising all the clients the first step, which is to make an assessment of their businesses, that whether they are conducting the relevant activity or not, because the definition has a very wider scope. It is not just with the name that we can match with the licensees and we can clear the positions. Also, when we go for exemption status, what are the documents and everything we have, whether they are eligible to claim the exemption status or not. So all these needs to be very clearly notified to the authorities, and the licensees can clear their status whether they are conducting the relevant activity or not. And also one important point in this is that while they're filing the notification, it will be done on an annual basis. It is not the case that only once they have filed the notification and they do not need to do anything in the future. So they need to keep reassessing their positions, and accordingly they need to notify to the authorities. I hope answers the question. Thank you.
Yeah, great. Thanks, Sakina. And I think, again, that question is a good one. It just kind of backs up what we've been saying throughout this talk, that if you're under any doubt whatsoever, it's best to reach out and have a conversation, and we can advise as best as we can. If you do need to re-notify and reassess, we're in a great position to be able to offer support there. Cool. So Manoj, let me come back to you. So the question is, we have a related party transaction from China and the UAE. There is no question from the tax authorities in China. Do you still think that there is a risk from the China transfer pricing laws?
Yes, there is a risk. Of course, there is a risk in the sense that if at the UAE level, if ESR test is failed, and if the FTA or the Ministry of Finance, they exchange the information with the Chinese authority, the Chinese tax authority, they may question the related party pricing, and there is a high probability of a tax adjustment at China level.
Perfect. Thank you very much. Yeah. So Sakina, I'll come back to you actually, because this question looks quite interesting. I think you might be in a good position to answer. So if you are a joint venture, will you still have to file the notification if you have relevant SIGA?
So the question is quite clear and the answer is very straightforward. The answer is yes. If the companies conducting the relevant activity, also they're performing it within the state, then definitely they should file the notification, and there they can clarify whether they will claim the exemption. There could be a case that they will claim the exemption. If not, then economic substance testing parameters plus report filing will be applicable to them.
Perfect.
Thank you.
Sounds good. Thank you very much. Manoj, I've got a quick question for you here. I know time is our enemy right now. So what would you suggest is the best approach to mitigate risk?
Well, I would say that, in order to mitigate risk, one has to take a consolidated approach, and we need to see the actual activity at ground level. We need to compare with the corroborative documents, because this is a new dimension. We need to reassess the filings, transfer pricing study, the CBCR filings, and the filings at domestic levels and free zones levels. to plug, all the loose end, not only UAE level, but at the group level as well. And this would also mean that, this is a separate exercise. This is a risk exercise, which is other than your ESR filing and ESR report. So the separate level, we need to do a risk assessment exercise. This can be done separately to mitigate the risk. Thank you.
Cool, thank you very much. I think we've just got time to squeeze in one more question. So, Sakina, I'm gonna throw it over to you. The question is: if our UAE branches and HQ are in Bahrain, should we still file the full ESR report?
Yeah, thanks, James. So the answer of this question is, if you have a company located within the UAE, right, then it would be branch of a foreign company if the HQ is located in Bahrain. So definitely in that case, this will be treated as a separate entity. You need to, reassess your position, and accordingly, you need to file the notification whether you are conducting the relevant activity or not. The only thing is you do not need to consolidate the income or expenses of the branch or HQ which is located outside the UAE. I hope this answers the question. Thank you so much.
Perfect, thank you very much. Can we go to the next slide, please? Cool, and the next slide. Perfect. So look, everyone who has participated in today's event, thank you so much for taking the time out. I have one final request, please. There will be another pop-up that will appear in your windows in the next couple of seconds. Can you please just take 30 seconds of your time just to give us some feedback? As you can see from our upcoming webinars, we do a lot of education with our clients. We've got DIFC, DPL, data protection law, risk mitigation for COVID, something that's really, really vital if you are someone who is looking at improving business continuity as we come into 2021. Our ICV program is very, very popular in the region at the moment. And from a personal perspective, the next webinar that I will personally be hosting is on ICFR, IFRS, and data protection specifically for the insurance space. So if internal controls, financial reporting, and reporting standards are something that interests you, please do share some feedback, and thank you very much. Enjoy the rest of your day.